What is up, outliers? Today, I am just going to recap some of the GameStop live stream that I do Saturdays at 5 p.m. Pacific time, because I actually learned some really interesting things. And because it's a short market week, I'm going to do my standard weekly outlook video tomorrow, being Monday, because that'll be right before the market opens on Tuesday. So today will just be about GameStop. And there was a couple really interesting things that I picked up from the live stream yesterday, which I always remind everybody, I have a blast doing those because of this, because I have the opportunity to learn a little bit, hopefully share a little bit of my experience and information with others to maybe help them with their process. But I love that it's this beneficial back and forth style interaction, which is super fun because I think it's really informative for everybody. So one of the things I did yesterday was I popped onto DFV's, Roaring Kitties, page on Reddit, and I went all the way down as far as I could go to the origin. And I found something fascinating, something that I didn't expect to see personally. And when I clicked into this, I can see that we started with a $113,962 account, and I can see $13,962 is in cash, and then I could see $100,000 is used. Okay, nothing so special about that. This is what I find semi-special. The fact that his entire portfolio here is in options. I genuinely took the cat to be a stock trader that used options to amplify his position. This tells me otherwise. This is an options trader. Now, again, obviously he trades stock and stuff like that. I'm not saying he's one or the other. Most of us are not relegated to being one or the other. But my original perception was that when I went back this far and started looking through these, that I actually would have seen a stock position and then some options amplifying it, not just options. So I found that really interesting. And the curious thing is I go through a couple of these different cycles that I can see these different posts, and I pick up another really interesting series of adjustments that go into these positions. So the first thing I want to note is take a look at the fact that we have 1,000 total options in here, and we started with just 50, then we started with another 50, and notice the time between these trades. So we see from the 7th to the 20th to the 12th to the 18th. So we can see some time passes. We're not scaling in right away. And one of my favorite parts here is we actually get to see a little bit of degenerate behavior. I use that term with all due respect and just love for the dude and what he does. And I also identify as a degenerate. I think that's what most of us are as traders. And I see he starts, with $5 grand, $5 grand, $5 grand, $5 grand. And he's buying when it's 60, 75, 55, 50. And then all of a sudden I see a 21 grand block come in. So then he grabs 200 at 30. This is the quintessential adding to a losing position, scaling in. Now, again, I say that partially in jest, because a lot of the standard methodology you will hear from a lot of traders, kind of like the CanSlim style specifically comes to mind, but others as well, where you don't want to add to losing trades. I myself actually don't fully believe in that. And I think that once you become a slightly more experienced trader, you get to explore these areas of nuance. So to me, I will add to losing positions if it's part of the broader plan. So I don't actually view this as just kind of being, like a lost YOLO degenerate trader. I view this as him scaling into a position. And then when it got really cheap, he liked it at 60. He liked it at 75. He loved it at 30. That's what I took from this. Because the other thing I noticed is that he also scaled back in as it was going up. So this is a really interesting behavior to me specifically because he started so light. 50, 50, 50, 50. And then he essentially doubles plus for the rest of these transactions. The smallest transaction after that is 100 lots. So that I can't help but find interesting. Now, another interesting thing I find about this is that this is clearly centered on a specific strike. So he's scaling into the same position over time. So if we go back to this first, we can see that this position went on pretty early. And if I hover over this, it should tell me when he posted this, the 8th of September in 2019. 8th of September in 2019. Take a look at the options he bought. He bought leaps that were out in 2021. So he's playing the long game here. The other thing that this tells me is, especially when he first started with GameStop, is that this isn't as scalpeled of an approach as I thought. Because when we're analyzing everything that he's doing, it's so easy to fall into this, I don't know, to this mindset where it's like, yeah, this dude essentially is a time traveler. He knows what's going to happen before it happens. He positions and times it perfectly. And as I look through more of this, again, he's an absolute stud. He's crushed it, but it's not perfect. And again, I use that with all due respect. I'm not saying that he did anything bad or anything like that. It was just that my perception after looking through and reading about him, I kind of built him up to be where everything I thought he did was like perfect. And as I go back this far, I can actually see elements where, again, there's no reason for him to go out as far with leaps if he had a specific date or a specific time in mind for something to happen. So this, to me, represents him trading this broader thesis of him liking GameStop. This is, again, to me, not indicative of him attempting to trade these different FTD cycles and stuff like that in the beginning. Because otherwise, I don't see why you would position it quite this way. But I thought that was interesting. Then if we scroll up a bit, we have to go for a while because this is still the same position, all options. We have to scroll up more. This is now 29 November. All options still, no change. Then we go into 11 December, all options still with one additional trade here. So his account value is declined. It's gone from 113 down to 83. And he added another 100 lots at the same strike. So now he has 1,100. So he's kind of moving in even lot increments. Again, this is all part of the fingerprinting process for me. Then this happens. We now go into a bunch of different expirations. And what I find so interesting about this change is notice how we now have even closer expirations. So we still maintain this 8 call position, but then we have July in 2020, April in 2020, Feb in 2020, and then April in 2021. So he's maintaining a deep position. He scaled down this front options position and he spread some of his capital around. Fascinating. He took this from over $100,000 position to down to 62, and then he started moving that out into other strikes and expirations. Very interesting. And again, this was really surprising to me because this is all the way out now in 31 December 2019, and there's still no shares at all in this picture. It's all options. Find that very interesting. So then we go out a little bit further. We still have all options, and this is now 14 Jan. We go out further. This should be the end of Jan 2020, all options. Then we have end of Feb 2020, all options. His account has contracted meaningfully. He's down to 44 grand from his start. I didn't catch what his peak was, but from his start was over 100. Now we see shares. So this is the first time that we see shares enter this equation, and it's just $1,400. So his account value is now back up quite a lot. He has 117 in cash, 215 total. So my guess is he deposited a bit of money here and then obviously made some money potentially off of these options and stuff. But this takes us now to April of 2020 is the first time I see him buy shares. So this dude has been trading options really as a leveraged position for some time as he's building out this position in May of 2020. Notice his share equivalent hasn't changed and he's building out more options. So I thought that was really fascinating. And I learned a lot about the way that he tends to purchase options, what expirations, all of the trades that I've seen him put on as I scrolled through this whole saga is not short dated. He's not doing a bunch of stuff that's expiring in like 5 seconds. most of the stuff that he's buying are things that are further out in time, and most of them are out of the money, right? So we can see that in this case, the stock was trading at 401, and we can see that he had the 8s, 10s, 15s, 20s, and 12s across different expirations. These are all further out of the money. So the other thing that I identify as I go through this whole process with him is his preference for strike selection via, I'm using it mentally as a surrogate, delta. He has a bit of a delta preference. So we can see him now scaling more into shares again. And this process continues for him. So I don't know if everybody else knew that. It's probably old news to the vast majority of people out there. But again, I'm new to this. So I'm enjoying learning these different artifacts myself. This isn't something that I've come across a lot of different places. I think one of the reasons why I didn't expect to see this is because when I first started doing the live streams and talking with people like Newton and kind of learning the background, it was explained to me that actually for a long time, Superstonk and like some of these other communities wouldn't even allow the discussion of options, which again, that just led me to believe like, oh, okay, yeah, then, you know, since so much of this is modeled after Roaring Kitty, I took that to mean that, yeah, he obviously used options just as a position amplification, but the majority of his money more often than not would be in stocks. That starts to happen here in July of 2020 as he's moving into more and more of the equity. So really interesting. And I'm really interested to see if we find out soon, hopefully, if he's maintained some sort of GameStop position as he's been playing Chewy, because as I go through his entire portfolio, going back from when he started here, I mean, it's all GameStop, right? So I haven't seen him trade other things in here, and I haven't really picked up on, this is hilarious. I haven't really picked up on that pattern for him. So yeah, I love the way that this dude calls it a straight YOLO from the get-go. That's essentially exactly what I see here as I watch his account value go from 22 mil to 48 mil to 33 mil. And the dude just doesn't care. He's just holding through all of this. I saw the account value go down to 26. I mean, it's epic. It's absolutely epic. So then we see the ending account value at like 34.4 mil in 2021, final update. This I find interesting that he called it the final update on 16 April. This is interesting. And I would love to learn a little bit about why this as the final update versus April 17th or the end of April. Like, why here? I don't know if this had to do with the case and stuff like that that was going on and the fact that he was going to have to appear in front of Congress. I don't know if that happened here or if this happened previous to that. You guys got to help me with that, because I know that you know the timeline better than I do. But then he comes back, obviously, to June, and the dude is gone from 34.4 mil to 210. So $250 million. Absolutely fascinating. Learned a lot. So what I want to do in the next GME live stream is actually go through these early trades more in detail and like go back into on demand on Thinkorswim and like actually explore these positions, see what they looked like at the time that he was getting in. Because for me, sheer curiosity. This is not something that I'm looking to trade off of. I actually model exactly nothing. What I do after Roaring Kitty, respect him tremendously, obviously, but what he does works for him. And I can tell you, I've been trading for a long time, but there's no chance that I want to put my entire portfolio into a single position. That's just my risk tolerance. And I know myself. And it's because, you know, my background with money and like what I'm trying to do is different than what Hugh's trying to do, it seems. And that's okay, right? Different people have different objectives. All I'm saying is that because I understand there's a difference in our motivations and the way that we treat risk, this wouldn't work for me. But the overwhelming majority of his success obviously came from his intellect, his ability to identify these opportunities, but also his willingness to literally take from the jump his $100,000 portfolio and take $100,000 of that and just put it directly into options. Like, that is not an insignificant move to make. So really, really cool to see. So yeah, that's some of what we learned from the past weekend. I'm looking forward to diving in even further, learning more. As always, if there's anything I should take a look at, let me know. Be an outlier. I'll see you all later.